Let's see if we can fix this really quick. Mic check 1, 2. There we go. Good morning, guys. This is Simon with Trade and Perform Coaching doing the preview for 729. So let's jump into it. We're going to do ES first. And so let's jump to the ES profile. By the way, past performance is not indicative of future results. This is for educational purposes only. And day trading ain't easy. Make sure you have a good trade plan, right? So getting started, all right. Number one, and really important, ES, NQ, and CL have been in balance for the most part. What does that mean? Some markets, so this right here, when we're doing basically this stuff, right, we have short periods of balance like we had in, let's see, June, right? And then we start creeping up with an upside bias. But you notice that upside bias has gotten slower and slower, right? Although the last 2 days have been pretty good. The last few days in ES have been pretty good from a movement standpoint, right? So the market goes in cycles. We have times where it's really nice and easy to change. We get good rotations down, good rotations up. And then we have times when it's slower. It's slower right now, although it's trying to get a continued upside break, and most likely due to the anticipated interest rate cut that's coming on Wednesday's Fed, right? So the two major events for this week are Apple's earnings events, I believe Tuesday night, and then the Fed on Wednesday afternoon, where it's widely anticipated that we'll have an interest rate cut. And I don't have any thoughts about whether that interest rate cut is good, bad, or the end of the world. I just know that it's anticipated that's what we're going to get. So looking at ES, what are the important areas? And this is going to take about 10 to 12 minutes to get through, just so y'all know. Number one, here's the old swing high. They will want to hold above the old swing high for a continued breakout, right? So the answer is trap back in. If we fail to get back above 30.2175, there is a good likelihood that we can either come and test three key areas that are below. And I'm going to point that out. There's Friday's TPO point of control, roughly at 3,006. Excuse me, Thursday's TPO point of control, which is 3,675, followed by 29.9475, followed by 29.87. And if we sweep the whole range, we will come down and tag 29.76. I think in front of the Fed, that's probably an unlikely scenario, right? Likely scenario is that we either come back in and there's an anomaly right here, come back in on some kind of new shakeout and retest that 30.11 to 30.12 where I would expect responsive buyers, right? Or we simply hold within Friday's range, hold above that 30.2175, and we continue creeping towards probably a likely goal is 30.50. It's a round number, and the market tends to like to go to round numbers. So that's what I'd look for to the upside, right? I'm not bearish. And really, if you wanted to be bearish, you'd have two things, right? Number one, you'd want to get below 29.76. It would trap traders. Number two, you would draw the 50-60 back from current low, swing low, to current high or most recent high, meaning this is our swing low before we had this current breakout. And you would get this area right in here, which is 3,004-ish down to 29.95. And I would expect, again, there's a naked point of control that's been untested at around 29.95. And I would expect a response off of that and a continuation and push to the upside, right? So that's number one. Number two thing that I'm looking for while I'm trading is a heavy push to the downside that gets absorbed. And I'm going to show you what that looks like really quick. ES, right? So this is the profile is what I use to find key support resistance areas above and below. What I'm looking for from the chart itself, right, is a heavy push down, right? So heavy push down. We then attempt to get underneath, and one of two ways. We either trap back below or we get back above this heavy push down. The problem with this one was it was way high. You'll see they broke out above, right? So that made sense, but you got a better opportunity there when you got this. You got a push down here that failed, and when they closed above here, it gave you a much tighter stop, right? So either one of those would have worked. That was a breakout right from the open on Friday morning. And then just to recap where the break came later in the day, see how we had that consolidation, and that 30.20 to 30.22 area was key. And what you'll see again is heavy push down, right? But then we ended up with MACD divergence, right? And then we ended up closing above that push down, and that is what ultimately generated that roll up to 30.30, and then they smoked everyone to the downside at the end of the day. So again, key areas off the daily time frame, right? And then looking for trapping traders either on the long side or the short side. In the current scenario that we're in, I'm looking to trap traders to the downside to push to the upside because that's where all the momentum is. So that's a yes. Let's go look at GC really quick. So GC is also in complete balance, right? So it's August. One of the things that we learn when we're trading in August is the breakouts and momentum are harder to get. So those are today's levels as published to the members. I'll publish them to the public shortly. When we look at the GC profile, let's erase all the lines. All right. Number one, you will see this was our old consolidation area right here. Let's see if I can get that to extend to the right. It won't. There we go. There we go. And we will. So you can see this is quite simple, right? Consolidation through here, breakout, and now we're backside testing that consolidation, right? And the idea would be one of two things. Number one, if you look at that consolidation low, or you go back to the swing low, which was over here, all the way to over here. Again, 50-60 areas are important. We have made a 50-60 retrace on a day time frame into this 1412, 1418 area. As long as it holds this area, the natural conclusion for gold would be that we're going to come back up and retest that high. When are we going to retest that high? All likelihood, we're going to retest that high into or just after the Fed, right? Assuming that they lower interest rates, that's what keeps popping gold to the upside. That's where the focus would be, right? So number two, what am I looking for in gold? Again, this is a replay. Here's my gold chart. And in general, right, what am I looking for? Big pushes down that then get trapped back into, right, as they set up for rolls to the upside, right? So let me erase all this, and I'm going to give you an example going back to Friday, okay? And by the way, because we are in balance, two-sided trade is completely acceptable for me in this product right now. So to give you an example of that, okay. Heavy push to the downside, another push to the downside, right? So there's two places I can take this, either above or on the trap back in, right? And both of these were, taking it from the top here was hard because the stretch was so big. But what I'm looking for is attempts below these pushes down for balance, right? And there's obviously, as people in the room know, there's other setups here, right? And or exhaustion pushes on top where we get one push, then another push, and we trap back in for the roll back down. Again, we're just in balance right now. My overall feeling is that we're going to push out and up to the upside. However, currently you can play the traps on both ends for pretty good trades. I didn't trade gold on Friday. I should have. It actually had decent range up and down, worth $400 and $500 a contract. I just was focused on CL, and I even kind of I fumbled the CL trade on Friday. Don't intend to do that again today. And then importantly, remember, Monday and Friday are the narrowest range days of the week. It's hard to get extensions on Monday and Friday in the summer times. The bigger extensions tend to come in September, October, November, right? This is the slowest month of the year. So my opinion is, or my approach is, don't try to get mega moves out of this. Just try to tag the ends of balance for pushes back in. When you get your P&L, grab it and move on to the next day once you get paid. That's my general opinion of that. And that's my 2 cents there. I'm looking for traps in coordination with, right, key areas. So the last piece I'll say about that is, what are the key areas above or below? Two key resistance areas on top. This, that 1448, this area, again, in general, 1435, 1437. There's really nothing above here, and there's really nothing below here until you get to 1411 to 1407, which is the bottom of that 50-60 retrace area. Again, you'll see how that lines up, right? When you pull this back in. And the reason why that is important is because the majority of swing traders are looking at this. We broke out to a high. They're looking for that 50 retrace to get the continuation. And this is consolidation in front of a news event. And again, I think this will most likely resolve with a push to the upside. A close and a hold below 1411 probably brings us up for a retest of these 1392 to a 1380 area. But we're not there right now. And again, I think if we can hold above Friday's value area high here in particular, which is at 1421.50, if they can hold above that, there's really not much stopping us from re-auctioning back up towards 1435, right? Except the fact that we're stuck in balance. But I think there's a nice trade to be had there if it'll set up intraday for a push to 1435. So lastly, let's go over and roll over to CL profile. All right, so here is CL. It's in balance hell and in tight range hell. And I like trading CL. And the biggest challenge for me trading CL when it's like this is I look like when we have nice wide ranges, right? Just a few days of balance and then getting these big pushes out. And they're generally pretty easy to set up long side and short side trades when this pushes one way or the other, but not when you're stuck in balance hell, right? And you end up not being able to get the move one way or the other. It won't break down and it won't break out, right? So the first thing to keep in your mind is the edges are probably going to get trapped back in on CL until you have a clear breakout. Now, most of the year, if you'll roll back from this, right, we don't get stuck in these incredibly long, uber tight ranges, right? Like even here where we're balancing, the range will go from like 63.55 up to 65. It'll be a 200-300 tick range. And week over week and day over day, it'll be relatively easy entry exits, right? And you can get clear stretches out of support levels intraday, right? Right now, all this noise that we're in right now translates into just this mega tight range, which comes down to a chart looking like, where's my CL chart, right? This. Right? And no one, or very few people, at least that I know, like to trade charts that look like that. And that's been back since the 25th, 26th, but even going further back before that, we had the exact same trading range in this 21st, 22nd, 23rd. And you'll see what we're doing is we're getting head fakes on the breakouts, head fakes on the breakdowns, and trapping back into this balance range. This balance range, if you highlighted it, and I'm going to erase all this so you can see it, would be highlighted by this to this, right? So 56 at the bottom, 57 at the top, and kind of peeking its head above is trapping traders above, peeking its head below is trapping traders below. And again, I'm going to roll back a little bit to see why this is so unique or unusual, right? Again, when we start summer, you'll see it gets really tight, but through most of the year, what we end up with as we stretch this out is you will see areas where we have tight balance, but it's only tight relative to the range. The rotations are actually quite robust up and down on the traps, and we just don't get mega tight. If we do it, it just goes for a day or two, like Sunday into Monday, and then a break to the downside. Thursday into Friday, then a break to the downside. You'll see where this rolls in relatively tight. Again, Sunday into Monday, then we break to the upside. So, and again, you'll see this Wednesday, really tight range. Thursday breaks out really quite nicely, and these become fairly easily tradable, right? And as you go a little bit further back again, you'll see we just tend not to stay in balance for that long during the regular or most of the longer term trading sessions. So where we are right now is just this little tight 56.40 to 55.80, 80 tick trading range, and it sucks. So my plan is to kind of lay back on CL, not trade it as hard or as aggressively, right? And know that I'm just looking for edges and I'm looking for key big pushes to trap traders above and below, right? And you'll see those get hit here, 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 where you're getting responses up and down afterwards because they're marking exhaustion points on each of these, right? So at any rate, that's my 2 cents. That's what I'm looking for, guys. Primarily, and everyone in the room knows the key setups that I'm looking for, right? Which is using the waves and divergences to set up my trades. So what I want to set myself up for today while I'm trading, right, is to lay back and go, what does my key setups look like? It's Monday. I know it's slow, and I want to avoid over trading, right? And when I get a setup, I'm going to know, hey, it's going to take most likely longer than normal or usual to get the follow through push that I'm normally looking for, which can be frustrating because you can end up going, hey, I've been in this trade for an hour, hasn't gone anywhere, close it out for a few ticks, then watch it push, right? And that means one of two things. For me, I really don't like going with the slower up, down, up, down, up, down rotations and sitting there. So I end up cutting my trade short. For other traders and traders that I coach, if you see the setup and you think it's going to push one way or the other, right? That means you're going to have to sit there with if for most traders develops anxiety, you're going to have to sit there until the push comes and trust that it's going to push from point A to point B, right? As it's set up on the charts. That's difficult for me to do, but again, certainly very doable, right? If you have the right mindset. That mindset does not work for me. I like fast markets, but I do know that structure and traps work. In summertime, it's just going to take a long time to make that trade work, much longer than I'm usually prepared to sit in a trade. Anyways, my name is Simon. I'm a Trade and Perform coach, and if you'd like to visit us in the room, send me an email. It's TRADENPERFORM, TRADENPERFORM, at gmail.com, and I'm happy to extend you a 5-day pass into the room. I hope everyone trades well, trade safe. It's August. The major event is on Wednesday, and I think everything's going to be driven into that Tuesday night. Wednesday morning, I think everyone's kind of on hold, so expect slow, grindy markets. I hope I'm wrong about that, but that's my mental preparation going in, is that it'll be slow and grindy, and I don't expect a lot of speed involved in the markets. If that changes, I will adapt very quickly, but I'm relaxed going into the day. I don't think there'll be a big downside move for sure. And any downside move that we do have, I will be looking to get long in ES, and the same goes for GC and even CL, because we're just stuck in that little balance range. CL will be looking to trade both ends of that range. Anyways, have a great day, and I will be back at a little bit after 8 o'clock, guys, to open up the room. Have a great day. See y'all.